Well, I want to talk to you about a client who was 92 years old at the time he found out that he had IRS problems. And he didn't even know he had IRS problems. What happened was his wife had died about 10 years before, 8 years before, and he asked his daughter to move in with him. This was in Brooklyn. And the daughter actually moved in with her son. Unbeknownst to my client, his daughter was a drug addict and basically stole all his money, ran up over $100,000 worth of credit card debt, and didn't file tax returns, told him all the tax returns were filed. And the only reason why he found out about this was because one November, maybe back in 2012 or so, his grandson dies suddenly, dramatically. Turned out it was from an overdose. Well, within 48 hours, the mother also dies. And I wound up actually getting an autopsy of both, and they both died from drug overdoses. So I got involved in this case because after they both died, he had one of his nieces come over the house to help him out. Turns out there were a drawer full of unopened envelopes from the IRS. And when I got there, I opened them up, and I see statutory notices of deficiency going back for years and years and years, which is essentially a 90-day letter that the IRS gives you that if you don't contest it, you're barred from even going to the tax court. So all those years, there was nothing we could even argue. He may have had valid reasons, but he never filed tax returns. He thought he did, but his daughter lied to him. So that's how I got involved in the case. Now, interesting for him, he was 92, but he had done fairly well in life, and he collected a number of different pensions and Social Security, so his monthly income actually was about $7,000 a month. So as far as the IRS was concerned, he was a ripe target, because if they see a monthly steady income, they figure they're going to get something out of this thing.
And he was bedridden?
He was in a wheelchair.
Okay.
He was very poor physical health. He had a nurse, shortly after I met him, I wound up having a nurse live with him 24 hours a day. He needed a lot of medical care. And when I first discussed his physical and mental condition with the IRS, you would think it would generate some sympathy, but they were not interested. He was just another statistic, and they could care less. The IRS is not in the business of caring about individual taxpayers. They go by the books. So we went by the books, and I tried to get him a currently non-collectible status based on the fact that he had no income. He did have an asset. The only asset that he had was he lived in a two-family home in Brooklyn, which was in terrible condition, needed $100,000 worth of repairs, unsaleable, unmarketable. But again, he had his daughter had run up over $100,000 worth of credit card, wiped out his savings account. His checking account basically just consisted of the monthly pension and Social Security payments. So in the beginning, I wound up getting a currently non-collectible based on the fact that he was able to put his nurse on the payroll, and I could show them that he had negative cash flow. Well, unfortunately for him, his live-in nurse decided that she didn't want to be on the payroll anymore. For God knows what reasons. Maybe she had her own tax problems and she wanted to be paid in cash. I said, this is a problem. I said, a variety of problems. I said, not only will you now be required to pay something over to the IRS every month, but you're not even going to be able to claim her as a medical deduction on your tax return if you're paying her cash, and you're going to be liable for payroll taxes or whatever else. He didn't care. He loved the woman. So she was very nice to him. She took care of him. So to make a long story short, as I predicted to his nephew who I was dealing with, I prepare a currently non-collectible application, the 433 form, and the IRS determines they want $1,700 a month withheld from his pensions. So they wind up doing that, and it continued for about 4 years, And then unfortunately for him, he just passed away in January at age 97. So, but the moral of the story is that the IRS doesn't care how old you are, how frail you are, your circumstances for owing the taxes. They will go after you if they think they've got the ability to collect some of the taxes. Again, the average IRS agent basically goes by the book. They're not there to exercise discretion or compassion. They're there to follow the rules. And if the rules say that they can collect $1,700 a month and use that to apply towards a tax liability, so be it.